The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We've been emphasizing the importance of hunting one setup, one pattern, or if you're trading one market, understanding the different opportunities when they present on your favorite instrument. But I'll start with this slide, and I want traders to really understand the importance of this slide. Markets only do 3 things. The problem is that the traders are trying to trade all of these on any market, or they're trying to trade randomly on one market. And I keep emphasizing the importance of mastering 1 or 2 simple setups, regardless if you're trading your favorite instruments, a basket of instruments, but the importance of understanding the 3 things that markets do. These are the only 3 things they do. They will break out, pull back, and continue, whether that's on a small time frame or on a higher time frame. Small time frame for some traders could be 30-second charts. Might be a daily chart, or as in the case of Peter Brandt Classical Charting, weekly and monthly charts. They're looking for breakouts that will do range expansions on the higher time frames. Or markets will break out, they'll fail, and they reverse, and the same thing applies. Now, I've specifically spoken about targeting the smallest time frame, for me, is a daily level, a daily range, because that, in all essence, if the trade setup presents, we're targeting either a range expansion, in the case of a trend trade, of a daily range, or a range reversal. And if we're in a monkey hammer or a 5-star, a triple plus setup, we're looking maybe at a weekly range. Now, some of these opportunities may go for 2-3 days, depending on how traders are placing themselves into the markets. I'm looking for opportunities on the smaller time frame where we can scale in on the smaller time frame in a market that is now going to go on a daily range. Now, often that is because we have traders trapped either up high or down low. We're going to look at some specific examples of this from this week. Or they stay in a trading range. And even in a trading range, as we've learned in the ACB Masterclass, we can get one-day all-in opportunities when markets break out. When markets break out and close and break out. Those are signals. Now, here's the best part. The market gives us signals. So here's the thing. These signals are freely available to all traders on all time frames. And they're on any market. This is so simple. You can make trading as difficult or as simple as you want. Now, if you go back to that last slide and just really understand the only 3 things that markets do, you'll understand the importance of when markets give us signals. The trader is the only variable. So traders either know exactly what they're doing and they've mastered their emotions, their behavior, their mindset, their daily process at identifying their 90-10 setup in the market when it presents on any instrument or their favorite instrument, or they don't and they're going there each day chasing movement. They think they're trading it, but they're actually chasing movement. And in a lot of cases, they're chasing it right into the trap. I see traders doing all kinds of crazy things. And they justify it that that's their setup, when in reality, they're just chasing movement. So I want you, number 1, your first piece of homework today is to ask yourself, am I chasing movement, or do I actually know exactly the setups that I'm looking for? Do those setups have trigger or signal days that can alert us to the best candidates, or when your favorite instrument is potentially setting up for a higher time frame scalable opportunity? Breakout traders in the markets. First red day. Now, one of the challenges, I want people to listen closely, is that people try to short the high of a market that's continuing to go up, and they're saying, well, it was a first red day. Even though it's making higher highs and higher lows, that market is in breakout. They're trying to short a market because it's up high. And we've gone through this in the higher time frame videos. Go back to the playlist, watch those higher time frame videos. There are several opportunities with first red day and first green days in markets that in the first red day case have already broken down and pumped up. We just went through that with the Swiss franc in the last video. Go back and watch that video again. Breakout, pullback, continuation after first red day signal. We can see that with markets beginning of a new month, first green day. I call them the gifts that keep on giving. And of course, I'm going to call this the millionaire maker, the inside day setup. And why I call it that is because it's relentless, showing up on any market. Any market. Now we can get false break reversals. We can get trend trades. What setup are you hunting? And then just, number one, being patient. Now, the next problem with traders is that they just want to trade all the time. And then they say, well, it was this, it was that. But they're just trading. Like just crazy stuff. They don't have any patience to sit on their hands. They actually haven't mastered the setup. So I encourage traders to step back and simplify everything. Simplify everything until you know exactly what you are doing. Now, I think if you really just stop trying to trade all the time, you can make trading a pursuit of pleasure, as Paul Tudor Jones says. Because the number one thing you need to know about yourself and about the markets is what not to do. Well, what shouldn't I do? Well, you certainly shouldn't go to the market at all without any plan or money-making setup. Now, several traders will go there every day going, well, I know what my setup is, but they can't even draw a picture of it. And I know people say, well, what's that got to do with it? Well, if you can't draw the setup that you're actually looking for, how can you even find it? Then I'll say, well, send me 10 screenshots of the money-making setup, the setup that has made you money or that you've printed off and you've back-tested and that you fully understand based on the signal that makes you money. Now, I always joke with my friend Steven, does my setup present today? If it doesn't look like this, well, then I don't have my setup. Now, funny enough, this is a chart of an index, a 15-minute chart. This is from back in 2021. But I just want traders to understand this is a setup, level to level. Now, this is today's NASDAQ. We just spoke about the three things that markets do. They break out, they pull back, and they continue, or they break out, fail, and reverse. When we look at today's 15-minute chart, after 10 a.m. major red news, we have the high of week level from Friday to the low of day level from Friday. Subtle variation, 10 a.m. major red news, we have the same setup, a subtle variation. Trap and shift, as my friend Steven says. Pump and dump, a 15-minute version of that over the course of the week. Day 1, day 2, and a 10 a.m. reversal from level to level. I have multiple examples of the same setup. The next thing is random impulsive trading. Now, the funny thing is I could ask 500 or 1,000 traders out there, and they all know this stuff. And as I said to one trader last week, his comment back to me was, we all know this. And my response to that is this. Everybody knows it, but very few do it. Very few stick to the plan. Now, obviously, once traders are starting to develop mastery over some of their impulsive behavior or their random trade selection, and they start to isolate down onto money-making setups, then they may find that their performance is not quite up to par. And I use the phrase all the time, 1% better. 1% better is because you can only develop your execution skills, your patience, your confidence, your discipline, your mindset in live time by doing that yourself. Which is why I always laugh when people say, they want to watch live trading. That's the most ridiculous, silly thing a person can ever imagine, to believe that they think that watching actually does anything for them. And in fact, I think that they're not even serious when they make those sort of comments. They're tire kicking. They're not even traders. Because the traders in our community, I know for a fact, have rolled up their sleeve. I have traders that can send me 500 trade templates of the same setup because they've gone back 10 years and searched through multiple instruments and built their muscle memory. And they have zero interest in anything else other than developing their own skills so that they can make money from their setups. So poor executions involve getting in too late because they're scared or they don't have the confidence or they're counting little bars and pushes instead of understanding the importance of levels and timing. Once you have the setup there and price action has confirmed that into the timing window, whether you're getting in on a pin hammer, whether you're getting in at a level after time has confirmed that, everything will be confirmed by time and the level, whether you're on a 1 minute, a 15-minute, or an hourly chart. Now, obviously, if you get in on an hourly chart, you might be getting in really late. Or if you're getting in too early and then you're stressed because you've over-leveraged because you were so excited that your setup was presenting and it wasn't quite ready to go yet. So you're sweating until that market starts to move in the trade direction. Or you get out too early because you're going to lock in 50 cents instead of letting it go for 500, whatever the trade levels you were targeting on that setup were. Or you didn't peel some off, or you didn't take it off when you should have when it hit a level, and it's come back and stopped you out with half or less than half or at break even of what you should have locked in on a winning trade setup. And these all have to be developed and hardwired by yourself through repetition, through the same executions and setups and behaviors repeatedly until you work out all the cobwebs. So if you go to the screen unprepared, or you have no, real solid idea of what you're actually doing or where you're going to with the trade, or you're just getting in and trying to trade a market and hope that it goes in your direction, then you'll struggle and you'll stay in that 50-50 win-loss, win some, lose more, win less, and then you'll get all ticked off and go and kick the cat. And then you will start again in system jump or something, and you'll repeat the same behaviors instead of actually mastering one or two really solid money-making setups that make you money, and just sit on your hands in between and don't do anything random, impulsive, degenerate, self-sabotaging that can ruin your good results. It's funny when traders, they learn more, they want to learn more, and they be the jack of all trades, and they're still not making any money, and they're master of none, master of nothing, just master of knowing a lot about the markets. I've been trading for 20 years. What does that mean? When somebody says they've been telling me they're not new to trading, they've been trading for a long time, what does that mean? That they've been trading markets for a long time? Have they been making money for a long time? Have they made a lot of money for a long time? What does it actually mean? You can. Mark Douglas said this the best. You can know nothing about trading and make money. But if you want to do it consistently, you need to develop your edge and master that edge and understand how to execute it, how to manage your emotions, how to avoid the pitfalls that markets will create for traders to get into. The movement and everything is designed to get you in. It's the trader that's the reckless train wreck. The trader is the reckless train wreck. The markets do the same three things every single week. The question is number one, do you have a setup? Is one of those markets, or is your favorite market giving you a setup? Now let's just look at today's NASDAQ as an example. This is an hourly chart. Now I really wanted to we'll walk through a couple different instruments today and just paint home the three things that markets do. The problem is that traders create all kinds of gibberish, BS, garbage. They make up all kinds of crap about blocks, gaps, sweeps, hunts, runs, arrays, discounts, premiums, inversions, commitments of traders, whatever you supply, demand, all these crazy things, whatever it is. But there's only three things that markets do, and there's only two things. Well, actually, no. There's three things a trader can do on the day. On any given day, there are only three things that a trader can do. That's the best part about this is I challenge any furu out there to deny this. Regardless of what your philosophy is on trading markets or anything else, there are only 3 things a trader can do at any given time: buy, sell, or do nothing. That's it. That's trading in a nutshell. Buy, sell, do nothing. Now, the next step is that if you do take an entry into the market, what is your entry criteria? So you have criteria that signals you to enter into the market. There are only 2 things you can control once you are in the market. So once you're in the market, there's only 2 things a trader can control: how much they will lose and how much they will win. That's it. So there's 3 things on any given day that a trader can do: buy, sell, or do nothing. Once they are in the market, if they take an entry, is place a stop loss to control their losses, and a take profit level or a plan where they will exit with profits out of that winning trade if it's a winner. That's it. That's all a trader can do. And that's it. Everything else is just crazy. I hear all kinds of crazy stuff from people about trading, and it's not. You either buy or you sell or you do nothing. If you enter the market, you place a stop loss, a take profit level, and if your trade plan necessitates, has the criteria in there for you to move to break even, a set and forget opportunity: entry, stop loss, and a take profit level. There is nothing else. So if markets only do 3 things, the question is are you trying to trade all the movement of the market that you're in or the markets that you're in, or do you actually have money making rinse and repeat setups, whether you're buying or selling or doing nothing? And if you are in the market, placing your stop and controlling your risk on the trade, and then identifying where you will take the money off the table, and then either having an active trade review process to improve performance, and then making sure that you're not doing other things in between that sabotages your good results. So my favorite part is when people act like they don't do that. They'll win some trades, they're elated, and then they'll do other things behind closed doors at the keyboard and they act like they don't. Now, I know this firsthand because I did it for years. I would do all kinds of great things the right way, and I would do all kinds of damage doing other things that I shouldn't have been doing. Now, a lot of traders ask, how did you fix that? You have to make a decision to not do that anymore. Don't do what doesn't work and does damage, and do what works and nothing else. That's it. There is no secret. Stop doing things like that. Stop taking losing trades. You know, a lot of amateur retail traders who have no clue exactly what they're doing, they go to the screen thinking they do. They don't have a plan. They don't have any money-making setups. They hate when I say that. I say stop taking losing trades. They haven't mastered any setups. They think everything's 50-50 and that you have winners and you have losers. Stop taking losing trades. Now, if you don't understand what that means you're still guessing on some of your trades. Master setups, or master the same setup over and over and over again, which is what the masterclass was about for my sons. One repeating setup on the same day based on any market that brought instruments up on the watch list, and then whether or not they set up into the New York session on that one setup only. Because I don't want them learning about anything else about markets or anything else. I want them to look for one high probability setup once a week. That's it. Don't ask questions. Just execute the trade if it presents in the timing window exactly the way that's been trained to them. And there's basically zero room for error if you're patient and you wait for that signal. Because the coil, you cannot trade against the coil. And it's entry, stop loss, take profit. Now, this wasn't an ACB template in terms of the signal or the day, but just for the purposes of this video to demonstrate to traders. We just talked about 3 things that markets do. Now, we had a market that broke out on Monday, but in terms of the ACB template, all time frames are driving this move. We had 10 a.m. major red news. You can only trade in the direction of the coil. You can only trade in the direction of the coil. I call that dummy proof. And if you waited just for confirmation, you still can't mess the trade up because it's with the coil. I call that the dummy proof trade. If you're not sure, but if you use it on any other given day and there's no setup, guess what? You're just randomly, impulsively trading, taking trades. There's your losers, unless you happen to get the direction right on this one. But that's not a coil. This is a 3-session setup after major red news, but understand the bigger picture. The market broke out, it pulled back, it tried to continue higher, and coiled, reversed, and failed. Traders who were caught up high were trapped. If they were trading yesterday and holding positions, maybe they were holding a long, maybe they weren't, maybe they were trying to take a trade, no idea. But we had volume trapped up high. It's almost like a neckline. You can call it a double top, whatever you want. But this was after 10 a.m. major red news. We had Powell speaking at 10 a.m. The market's broken down and pumped back up into Friday's high of day level. Breakout, pullback, failure, and reversal. Markets only do 3 things. Now, if we just go back, I'll just highlight this for traders because several traders think just because markets are up high, they can just randomly try to short something when there's no setup. Market closed in breakout the previous Tuesday. Continued to trade higher, but recognizing still in the previous day's range. Closing higher, closing in breakout again. Closing in breakout at the end of the week. Traders are trying to short it up top here. It's still in breakout. There's no setup. And then they tell me, oh, this works sometimes, and you say that it works, and then when it doesn't, you don't post it. Okay, show me the setup. Again, traders do all kinds of crazy things, and then they blame it on external factors. They didn't even actually have a setup, and if they did, it's not in the timing window. And they're shorting down into the breakout. Now contrast that with a market that's already hit the low of day from the previous day, pumped back up into the high of day level. Remember what I said, level to level. So not only is it important to know what to do, it's important to know what not to do. If there's no setup, don't just try and short it against a breakout or go long against a breakout just because it's down low or up high. Again, behavior of the trader. Oh, it's not me, it's the setup. Well, what setup is it? Send me a picture of the setup. Show me the setup. Until you get really specific and master your mindset, your behavior, your emotions, and your setups, you will do random impulsive things and call it trading. And that's all that it is taking trades. Not money-making rinse and repeat setups. Catching a move or a rinse and repeat scalable best playbook trading setup. We talk about this a lot, but I have to keep emphasizing it. Most traders can't sit on their hands. Every single day people message me and they get in early, they take losses, or they get lucky, or they miss the real trade, or they blow their account up, or they go on tilt. And most traders are genuinely trying to do the right things. It's a daily battle. You're never free from doing damage. But then there's other traders who all they do is vent on everything external. They take zero responsibility for their own self-sabotaging behavior. They don't listen. They do the same thing the next day and expect a different result. That's what's comical. When you go to the market every day and do something random and impulsive and call it trading and expect a different result and then blame it on everything else. That's why most retail traders never go anywhere, never ever get to size. They go and they want to, let me watch. What are you going to watch? Go manage yourself. Sort yourself out. Master a setup. I've already said you can trade any setup you want. Master your setup and then learn not to be a degenerate gambler. And learn how to scale your setups up in size. Learn to find them as often as possible and don't do anything else. But most traders want to go there and trade movement. They don't really have an edge. They're just looking for trades. I'm looking for a trade. Where can I get a trade? They overtrade. They get emotional. They get impulsive. They engage in irrational behavior when they get behind the keyboard. And I say this every single day. The trader is the variable. Markets do the same things every week. Now, it's actually contrasting what most traders believe, that markets are random. The markets do the same things every single week. And then I see people, they got all these EMAs and they got indicators and stochastics and all this garbage on their charts, and they're talking about all kinds of things. It's like, okay, whatever. Show me simple rinse and repeat, or I'm not interested. Simple rinse and repeat, or I am not interested. The behavior of the trader is the number one reason most traders fail. Now, I'll use this as an example because this is a textbook example of how 1 or 2 or 3 scalable opportunities a week can significantly compound your trading account. I had a trader who just kept trading, and then he's, blaming everything on me and blaming it on markets and YOLO trading and just like complete degenerate behavior, not listening. I said, stop trading. Focus on the inside days. Why? Because they show up frequently, and for the most part, they're very easy to trade. And what I mean by that is that they're either going to be a reversal or a trend trade setup. Now, if you're not sure, don't do anything until you know exactly what you're looking for. Now, this is the Russell today. Now, why this is such an easy setup today is because we had 10 a.m. major red news. Now, I want to repeat this. I had traders in before 9. They're getting in at 8:30. They're trading at different times, and they're getting stopped out. And I'm like, okay, well, New York doesn't open until 9:30. I don't care if it's moving. I don't care if I miss movement. Now, my friend Steven, I keep talking about Steven. He doesn't even start looking till 9:45. That's what he does. He only trades reversals. That's what he does. Guess what that does? It eliminates a lot of the BS and garbage that traders get themselves into. So I'll repeat, traders are the problem. So if you're out there and you're struggling or you don't like what I'm saying, there's probably some truth in that, and that's that the markets are revealing that to you if you listen. Now, what was great about today is we had the inside bar signal day on Monday. We had breakout traders in the markets before we even got to the New York session. Breakout traders in the markets before we got to the New York session. Now, you'll realize, of course, without any gibberish and gobbledygook all over your charts, it's just one big box. And I said this the other day. If I'm buying, I want to buy at the bottom of the box. If I'm selling, I want to be selling at the top of the box when that setup presents in my timing window. Now, we had 10 a.m. major red news. So what that means to me is the market opens up at 10 a.m. Whenever there's 10 a.m. major red news, it's Powell, it's Fed, whatever. That means 10 a.m. rather than 9:30. So there's going to be some smoke and mirrors. There might be a trade setup. And now in this particular case at 9:30, we had a textbook perfect entry for traders. Now the problem is if we entered into this market, we had to be out before 10 a.m. Now I know there's going to be traders who are just taking a position and walking away, but realistically, you would never take a position in the market before Powell or any major red news with any size, realistically, because that could spike, it could gap, it could do anything. And if traders choose to do that, that is of their own volition. But I don't do that. Paul Tudor Jones, don't risk major amounts of money before an important report. That's called common sense, not gambling. We're not gamblers. So if you do that, you're probably not trading with size and you're just gambling anyways and hoping that it goes in your direction. Rinse and repeat means using common sense when our edge presents, but not throwing caution to the wind. Again, behavior mindset of the trader. If you're trading real size, you would never do that before Powell. But we can do it after Powell. That's the beautiful thing. So 10 a.m. major red news. Now here's the best part. If we just zoom in here, we've already got our trade underway, a very clean template, a buy low setup right at the New York Open, but we can't take that because of major red news. And a little inside bar after 10 a.m. major red news. But here's the best part. For traders in the masterclass, the dummy-proof trade setup presented. And all we had to do was be patient and sit on our hands and wait. Traders could have taken a starter inside of the coil after major red news. They could have added in, or they could have positioned themselves on the little inside pin hammer, whatever they want. They could have scaled in heavily in the coil. Now, why is that? Because we now have a market that is potentially giving us our range expansion opportunity on day 2 on the front side of a week in our coil after major red news, after our inside day signal day. Now, I'll just say this in closing. Market even gives us signals. How beautiful is that? So for traders who don't like hindsight, my suggestion to you for homework is to master hindsight if you really want to make a lot of money. Why is that? Because it repeats again and again and again. But the real problem is whether or not you, the trader, have mastered your emotions, your behavior, your skill set, even if you're trading one market, the patience to sit on your hands until you get a signal, and then whether or not you get a setup on the day in your session on the instrument that you're trading, and then whether or not you have mastered the execution skills. Now, the next part of this, for example, trader takes the trade, they put a take profit level in, or they exit after we clear the 100% expansion of our high-low consolidation. Can you walk away and not give anything back and come back again when your setup presents? Hunting out the same setup, whether it's on a different instrument tomorrow or you don't get one tomorrow, are you still going to try and take trades that you may not have any edge in? You may have zero edge. Now, this is a trade with edge. Signal day, setup, timings, levels, behavior of price, behavior of the trader. We had major red news. Sit on your hands and wait. After major red news, go back to work. Execute. And again, our simple model, you've heard me say this, once you have the level, get in anywhere. Once price confirms, get in. Then place your stop loss in place. Don't count little pushes and bars. Time of day, level, entry, stop loss, and a take profit level. Now, here's the most challenging part. Most traders want to trade every day. They want to take trades, but you make a lot of money on the setups and the days where it's really easy to make a lot of money. Now, this level is closing price, low of day level. They're very close together. You'll notice that. 10 a.m. major red news, 10:30, 10:45, 30 to 45 minutes after major red news. Entry. Now, let's even if we get in later or we're scaling in, a pin hammer, just like we just looked at on our simple basic model. Entry, stop loss, and a take profit level. Keeping everything simple. Gobbledygook is where traders get all kinds of, I got some winners, some losers, because they're trying to trade all the time. Gobbledygook with all kinds of mixed stuff. It's never reproducible the same. It's not scalable. They're just taking trades every day. Where's your scalable opportunity? To me, the scalable opportunity is when we're targeting a daily range. The daily range is the smallest time frame that I'm targeting. That's the A+++ setup. One of them. Markets only do 3 things. That's me. I'm not changing my opinions. That's fact. And that's all I'm looking for. Rinse and repeat. Keeping it simple. I'm not interested in learning anything else, learning more. I want to reduce. I want to learn less and focus on simplicity and reproducibility and scalability over and over and over again. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Rinse and repeat. Keep your trading simple, repeatable, and scalable. And as Paul Tudor Jones says, a pursuit of pleasure. Leave taking trades to the experts. Focus on money-making setups. 1 or 2 money-making setups. Markets only do 3 things. Keep it simple, and may the markets go with you.